This is a network that is backed by 75 terawatt hours of energy, which is the equivalent of 20 full-time nuclear reactors running full-time. It's completely decentralized, and it is a fortress of network. It's a digital fortress of network power, and it's nation state resistant. That's how big it is, and that's how strong it is. So you just keep the first principles. Don't worry about the price activity. It is going to be volatile. I expect the volatility. I actually welcome it. Why do I welcome it? Well, I'm an institutional professional investor. My hedge fund takes advantages of these drawdowns.
James Lavish highlights the increasing incorporation of Bitcoin into the conventional financial system as one of the most important findings. Lavish contends that Bitcoin is evolving from a speculative asset to a strategic reserve for organizations and even countries when macroeconomic pressures increase and public debt levels hit unmanageable heights. He points out that big financial institutions are starting to understand the special qualities of Bitcoin, such as its decentralized nature, scarcity, and resistance to the inflationary policies that push fiat currencies into crisis. Lavish emphasizes that a worldwide monetary revolution is just getting started. Large asset managers and central banks are quietly reviewing their holdings, and many are looking into Bitcoin as a way to protect against systemic risk. Lavish argues that this is about preparing for a future in which fiat confidence keeps eroding, not merely price speculation. The smart money is already positioning itself. Remember to click the subscribe button and enable notifications to ensure that you never miss our most recent analysis. Thank you, and enjoy the video.
And so now the banks, this is the big deal, is the banks can actually hold Bitcoin as an asset and build products around it. They can build lending products. They can build collateralized products. They can do things that they couldn't do before. And it's a really big deal that if you have Bitcoin and you can work with your bank, whether it's JP Morgan or if it's Wells Fargo or Chase or Citibank or whatever it is, you can work with them to use your Bitcoin as collateral for things, or they can create collateralized products or lending products for you. It's going to be a big deal, really big deal, because I know there are a lot of Bitcoiners out there who sit on a massive amount of Bitcoin that they don't want to sell, but they want to somehow monetize to use in their favor. They don't want to pay the taxes on it. They don't want to get rid of it, but they want to find a way to use it and benefit from it. And I think that's going to be a huge deal. And eventually it'll trickle down into things like, mortgages and loans against them and using Bitcoin in just, residential mortgages for collateral. So you don't have to put up your 20%, you can put up 10% cash and 10% Bitcoin or something like that. And it's going to be, I think this is going to be a big deal for both consumers, but really a big deal for the banks. They're going to be rushing to get these products out later this year as they get their head around and get their teams around this. So I think it's going to be a really big deal. And so what does that mean? Well, it just continues to march down that institutional adoption road, where you have institutions are embracing Bitcoin in particular, and they're going to be using it to build products and sell products to people. Is it in the best interest of Bitcoiners to go and have banks in control of this stuff? No. But does it help institutional adoption? Yes. And if that's the case, then ultimately it's good for Bitcoin adoption. It's just a philosophy of whether or not you want institutions involved. It doesn't matter. They're getting involved. And that's kind of it's a big deal for Bitcoin price, in my opinion, and that will affect it over the course of this year and the next year. Even though it's down here under 80,000 today, I actually see this as a huge opportunity for my fund to go and get exposure in places that will give me more upside in this Bitcoin ecosystem because of the price being depressed here. I think it's a little bit of a gift for us. So, but again, I'm a long-term investor. I take a very long-term view on this, and I'm optimistic about the future of it. Yeah. So first things first. Bitcoin does move off of liquidity. We know that. And like I said, it's because it's being treated like a risk asset. So As liquidity expands, Bitcoin follows. It lags by about 3 months, somewhere around 2 or 3 months. And so we saw liquidity drained at the end of last year. And so now it's coming back up, but Bitcoin's it's still lagging. It still hasn't, if you chart them against each other, it still hasn't reached that bottoming out on liquidity. When it, after it does, it will start to rise again. Maybe it has gotten pretty close here in the last couple days. But so that is important for there to be liquidity. But let's just face it. There's no long-term liquidity will go higher. The money supply will expand. That's just reality. There's just no way in our debt-based system that we could sustain this without having a debasement of the currency. That's just the truth. So we will still see the expansion of money supply and Bitcoin price going up, alongside that. So that's just the reality. I hate the question, but it's easy. Long term, I see the Bitcoin price higher, much higher. And that's because of the debasement of the currency, every single currency that's being measured against it. The only one that isn't debasing as rapidly as gold, but
James Lavish acknowledges that although Bitcoin is on a long-term upward trajectory, many investors may find its short-term price fluctuations to be perplexing and stressful. He argues that Bitcoin had a significant sell-off following its recent ascent to a new all-time high of $100,000. Lavish, however, sees the price reduction as a great opportunity to buy rather than as reason for alarm. He thinks long-term investors can use these declines to increase their Bitcoin holdings while prices are still low. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
While it's already reached all-time highs and had that euphoria of the Trump impact of the new administration, a positive administration, you've got the ETFs, you got the ETF options, you've got SAB 121 repealed. We're going to talk about that. You've got the gap accounting rule change. Now you've got the ending of choke point 2.0, hopefully soon. I still have seen some things in my hedge fund that suggest it's still happening, but hopefully that ceases very soon. And regulation around all this, regulation around stable coins, regulation around which of these cryptocurrencies are deemed tokens and which are deemed assets, and all of that stuff. Like Bitcoin is the only one that right now is deemed as a commodity. So really, really important to have that clarity. So those are all tailwinds for Bitcoin. So why is it selling off? Well, it reached an all-time high. It hit that $100,000 mental level, and it stayed up there for a little while, and then it sold off. And once it broke back through 100,000, now that becomes a resistance level. And so it's a mental level, it's a major mental level. You had a lot of from what I understand, there are a lot of OGs that have sold around the $100,000 level. They've been holding on to this thing forever, and they've made massive, massive, massive amounts of wealth in US dollar terms that they can go and turn around and use to buy other assets like, houses or planes or boats or whatever they're going to do. And so they're cashing in. They're going to go enjoy some of that they held on for so long. And that's what it appears to be happening from what I know. So, however, still price-wise, why would it sell off from 90-something thousand down all the way down to 80,000 from after the news that the strategic Bitcoin reserve was established? In the price of Bitcoin, clearly there was an event-driven trade going on where you had short-term investors looking for this to pop, meaning Bitcoin to run back over 100,000, go to 120, 150, whatever they had calculated in. And they expected that to happen if and when a strategic Bitcoin reserve was announced, along with a purchase plan. But the purchase plan wasn't announced. So whatever amount that they had mathematically factored into the price of Bitcoin had to be taken back out. So just to keep everything simple, if Bitcoin's at $100,000 and these momentum players thought that it could trade to $150,000 if the Bitcoin reserve is announced with purchases, then that's a $50,000 move. Okay, well, if they figure, well, let's just say it's 80,000. It's trading at 90,000 because that's where it was. That, in that $90,000 is the probability that that price would go to $150,000, whatever that probability is, 25%, 30%, 50%, whatever it is. Well, that is telling you that if it was trading at $90,000, that there was a 50% probability priced in that it would trade back to 100 at least, right? Because 50% probability of a trade to 110, let's say, 50% probability would mean that the price should be about $100,000 that's expected to go to. Well, it didn't. So you've got to extract that back out of the price. You got to extract that probability that's embedded in that $90,000 price out. And so that takes it back down by that amount. So that's the problem, is that was in the price and now it's being taken out at the same time, Brandon, that you've got all this uncertainty going on. And Bitcoin has acted like the leading risk indicator for a long time now. Whether or not it should be, whether or not that we believe it is, it's what the market believes. And the market believes that it's a risk asset right now. And so it's going to treat it like that. And so when people get margin calls, they sell it. They sell this along with other risk assets that give them liquidity, especially over the weekend. When you come into a week that you expect, some downside volatility in the market, what are you going to sell? Well, the only thing you can sell is Bitcoin because it trades 24/7. And so they're able to do that. So that's a long-winded answer of why Bitcoin traded down. But the simplified version is, well, embedded in the price of Bitcoin last week was the probability that this Bitcoin reserve would be announced with some sort of buying strategy. It wasn't. So that had to be extracted from the price, and here we are.
James Lavish describes how the current sell-off in Bitcoin, in spite of all the positive news, is a classic example of how short-term trading behavior and market psychology may conflict with long-term fundamentals due to good regulatory developments, optimism surrounding ETF licenses, and a general shift in opinion over the Trump administration's possible comeback. Bitcoin had already risen to an all-time high of $100,000. In addition, the establishment of a strategic Bitcoin reserve generated enthusiasm. Many investors had factored in the potential for a clear and aggressive Bitcoin buying strategy rather than merely a statement. The market swiftly withdrew the premium built into Bitcoin's price when that purchase plan failed to materialize. Lavish notes that early Bitcoin owners, who had been waiting years for this opportunity, accounted for a large portion of the selling. They saw $100,000 as a psychological turning point and an opportunity to turn part of their earnings into tangible assets, such as houses, companies, or simply simple lifestyle improvements. Retail and institutional traders who had been banking on a sharp increase to $120,000 or even $150,000 had to abruptly exit such positions. The price dropped precipitously as a result. Lavish, on the other hand, does not consider this to be cause for alarm. He highlights that Bitcoin has a distinct regulatory edge because it is still the only significant cryptocurrency asset that is officially recognized as a commodity under U.S. law. The long-term argument for Bitcoin is getting stronger due to continuous advancements in banking access, accounting regulations, and crypto legislation. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.